Hey, how's it going, everybody? Anmol here. Welcome to another edition of the Swing Trade Newsletter. Hope you guys are doing well and hope you're keeping safe and ready to go for another week of trading, another quarter of trading. So, obviously, first quarter of 2020, pretty good overall for the newsletter. If you take a look at from January to March, we average about, we made about 14%, assuming you were risking 1% per trade. If you're risking 2% per trade like I am, you probably ended up about 28%, which is pretty good. So the Q1 is off the books, and we've done pretty well. We've actually beaten the market returns by a good margin, and now we're gonna head into Q2, and we'll see what we can do. Hopefully, we can average the same return, and then if we do the same 13% this quarter as well, then we'll be doing pretty good for the year. So overall, we're doing pretty good, but let's just dive straight in and see what's going on. So the market basically has been bouncing. I would say stronger than what I had anticipated, and stronger than what I expected. Because I really thought, somewhere around here, we might pull back, get a little retest, but we haven't got that, right? We basically started to uptrend, and we've gone straight up, and it almost looks like the market's ignoring pretty much all sorts of news, which is fine, right? Who cares about news? And that's why I tell people, right? Price is the only thing that matters. What the stock is doing, what the market's doing, the price, the candlestick, that's the only thing that matters. Because if you look at all the economic news, right? Federal Reserve's putting all the money in there, unemployment's at a record high, and the economy's still not open. Businesses are struggling. People are getting laid off. So if you look at all the economic data, and obviously companies reporting no earnings, basically, right? So if you take a look at all those things, it suggests obviously not a good sign, but the market doesn't seem to care, and that's why I tell people, like, don't care about the news, because if you look at the news, we should really be coming down, but we haven't been. We've basically been recovering from that decline we got due to the coronavirus, right? So now we've back up into the 50-period moving average. So this green line you see on my chart, that's the 50-period moving average. So now we're touching that area. We touched that on Friday. I kind of look at I always put two moving averages. So the first one you'll see is like a 50-period, and the second one I just put is like a 55 moving average. Again, doesn't really matter, but I just give it extra room. But so that's where we could probably head into. On Friday, we touched the 50 MA, closed as a little bottoming tail, so we'll see what happens. So I really think the market, if we are to go down, right, if you're going to pull back, the market needs to stay below 289, in my opinion, right? So if we stay below 289, then the market could easily just do this, right? We went down, we went up, and we start to pull back, right? So that's, in my opinion, what could happen, and that's what I'm hoping happens, and that's what I'm expecting to happen. But if we start breaking above 289, area, then that opens the door all the way up into the 200-period moving average that you see right over here, right? And again, nobody should be surprised with what's going on. If you go back and take a look at the last video newsletter I made, what did I say? The last one and the one before that, right? If you notice, the one before that, what did I say? I drew this level right over here, this little band, and I said, hey, if you get above 264, we're going higher, no doubt. We're going to go into 290 maybe, into the 50 MA. So you can see that here, we got above that resistance area, and then boom, straight into where I talked about. So now, basically, we need to stay below 289, 289.40. If we stay below that, then we could actually pull all the way down potentially into 263, right? However, if we get back above 289.50, then probably that opens the door all the way up to go into 300, right? Into the 200-period moving average. And I hope that doesn't happen, because that's actually pretty bullish. And I don't want the market to be bullish. There's always more money to be made on the downside there is on the upside. So I would like it to come down. Just a full disclosure here, those of you who you've been keeping up with the newsletter. So again, newsletter is obviously great. We have the trades, but I also kind of let you guys know, for those of you who have 401ks, IRAs, or other long-term investments, I kind of let you know what I'm doing, as I let you guys know right over here that I'm exiting all my long-term positions, which I did, which is pretty good. I started buying back a little bit here, a little bit there, a little bit there, right? Started getting back in it. I actually got out of those positions that I bought, like right over here on the drop. I actually got out of them on Fridays, just a full disclosure. Now, that might be a bad idea. Market might, go all the way back up and I miss out. That's totally fine. That could happen. But basically, I accumulated a good position as we were going down, as I was walking you through in the previous newsletters. I bought a little bit around 250s, bought a little bit around 230s, bought a little bit around 220. So I bought the market as a investment, but we've come into the 50 MA now. I actually sold all of it on Friday. Got out of just my long-term positions. And again, we could probably go higher, I think, but I thought, you know what? Let me get out. If we get a pullback into 260 area, then maybe I rebuy it. And that's what I like to do. I like to trade my positions, and that's how I usually get better returns than what an investor would. So that's that. But again, let's take a look at how much retracement we've got so far. So if you take a look at from the high right to the low, right over there, you can see that the 61.8 retracement, right, is around 293 on the spider. So I mean, technically, again, I don't pay too much attention to Fibonacci's and such, but if you look at that, that suggests that you could probably come into, $293, which, does indeed make a little bit sense, because this is the gap right here, right? See the gap? So you're filling the gap, so it does make sense, right? But I hope that doesn't happen. I hope it doesn't happen because, well, we shorted the market on Friday, right? If you check the newsletter, I sent out an email. So I shorted the stock S&P using SPY on Friday as a swing trade at 284.70, right? And my stop loss is 289.40. So I'm currently in this trade. On Friday, we got into it, 284.70 by 289.40. It closed the day at 286.64. I just hope it stays below 289.40, and then we can get a pullback, and that's what I'm hoping for. But keep in mind, though, let's say the market gaps up on Monday and we're going higher, and we get stopped out. That's totally fine. I might actually re-short it. Does that make sense? So if that happens on next week, that market goes higher and we get stopped out of the short, I'll look for my email. I'll probably send out another email. Maybe we'll short it again, and this time just give a stop loss above the 200 MA, and then look for a pullback. So this is definitely going to be a re-entry for me if I get stopped out. But right now we're in it and looks good, and hopefully we can get a move down next week. So this is a trade that we're in. We're into the 50 MA, so we'll have to wait and see what happens. You look at the weekly chart, we're into the 9 EMA on the weekly chart. You look at the monthly chart, we're into the 21 EMA on the monthly chart. So we do have some resistance, but again, market, is acting pretty interesting these days. All right, so that's that. That's the market. Let's kind of dive in and take a look at what our commodities are doing. So taking a look at gold, gold obviously was extremely strong last week, but on Friday we closed down a little bit. We gapped down and closed into 9 EMA. Gold as a whole, I've always been saying it. It does look higher. It looks like it wants to test the previous highs into 180. But the problem is, it runs up so fast that if you remember my 9 EMA rule, anything that gets too extended away from the 9 EMA, the blue line, you do pull back, and that's what happened. You look at the daily chart. You got way ahead of the 9 EMA, right? And guess what happened? You pull right back to it. Look at the weekly chart, same thing. 9 EMA is still down there, so there's still more room to pull down. So gold, I think, overall looks higher, but it's probably going to have a short-term pullback before it can do that. Let's take a look at silver using SLV. So silver obviously got a nice bounce with gold as well, but now starting to look like it's setting up a sell setup, right? So if silver gets back below 1390, probably you could see some pullback here. You can see how it bounced straight up into the 9 EMA, leaving a topping tail. So silver does look pretty weak at this point to maybe have a move down lower. So that's that. Let's take a look at US dollar. So US dollar obviously was extremely strong, last month in March, just crazy moves up on dollar. But since then, we have basically started to consolidate. After pulling back, we're basically just going sideways. So one thing to keep an eye on is if dollar UUP ETF gets about 27.40, you could probably go all the way up higher. But right now, it looks like we're just going to consolidate in this area. Now, what does that mean? So basically, commodities are usually, right, in this market, it's been crazy, but are inverse to the US dollar. So as the US dollar goes higher, right, look at gold. Gold goes lower. Let's take a look at them side by side so you guys can see it, right? So you can see here, US dollar, boom, straight up. What did gold do at the same time? Straight down, right? Dollar, straight down. Look at gold, straight up, right? Now, dollar's going sideways, gold's going sideways. So they're inverse to the commodities. You can take a look at it on the silver as well. Let's take a look at silver. Compare that with the US dollar. You can see how US dollar popped, silver dropped. US dollar dropped, silver popped. So you're inverse to that. That's why it's sometimes good to keep an eye on these commodities. And yeah, so that's that. Let's take a look at the forex currency AUD JPY Aussie yen. And the reason I always like to take a look at Aussie yen is because sometimes Aussie yen gives you a heads up as to what the stock market wants to do. Because they're basically moved the same, which is maybe you guys didn't know, but maybe you can learn something new here. So take a look at the stock market, take a look at the Aussie yen. So on your left here, we have the currency Australian dollar, Japanese yen. On the right, we have the S&P 500. And now you can see how they're basically the same. Aussie yen starts to pull back, right? Sells off. Look at that. Stock market sells off. Aussie dollar, Japanese yen goes up. Stock market goes up, right? Aussie dollar, Japanese yen comes down. Stock market comes down. Aussie dollar, Japanese yen goes up. Stock market goes up. Now, what's interesting here is Aussie dollar, Japanese yen has started to look like it wants to pull back. And the stock market hasn't done that yet. So, it's very possible if the Aussie yen continues to go lower, then the stock market eventually will pull back. And that's another thing I like to take a look at when timing the markets. So hopefully that helps. Maybe you learn something new here. All right, now let's take a look at real quick the market internals, see where we're at on the market here. So we're going to take a look at the McClellan oscillator. So, I mean, when I look at the market internals here, like we did get overbought, right over there, but we corrected some overbought situation with just going sideways. Now the McClellan oscillator is approaching back into that overbought territory. So that does suggest a potential pullback. But when I look at the internals layout, there's definitely room to go higher, right? It's not like we're going to pull right back down, but there's definitely room to go higher on the markets until the McClellan oscillator goes back up into the 200 territory. There's definitely still some room potentially for the market to go higher. But what's interesting is you are way above my 13-period moving average. Usually you can see here, anytime we get extended from that 13-period moving average, what happens? You go back up. You get extended, right? You go back up. You get extended, you go back up. You get extended, you go back up. The same thing here. We got extended from the 13 EMA. We pull right back down. Now we're extended from it again. So, pullback is likely. So we're getting mixed signals here. Basically, here's the thing. Market is going to pull back sometime next week or the week after. But it might take 2 tries for it to happen, right? You might want to go a little bit higher before it actually happens. But a pullback is definitely on the cards in the coming week or so. So that's where we stand on the markets. All right, now let's take a look at our open positions. So Spiders already talked about. Another open trade we have right now is a CLB, Core Laboratories. We got into the stock at $11.82. It pulled back, but now it's back up again and basically hanging around where we got into it in the first place. I'm still in this stock, but it's got earnings coming up. So you see here, 22nd April, it's got earnings coming up, which is a day before my birthday. My birthday is 23rd April. If you want to send me a gift, I'll gladly accept gifts. Just joking. So 22nd April is what? 22nd April is Wednesday. So Wednesday, this thing is going to report earnings. So obviously, as a rule, I don't gamble. I don't hold through earnings. That's pure gambling. I don't do that. So we're going to get out of it before earnings. So earnings are on Wednesday. So probably maybe Monday or Tuesday, I'm going to get out of it, right? Now, I will send you an email, obviously, right? I'll send you an email. Hey, okay, let's get out of this here. So look for my email. Depending on how it trades on Monday and Tuesday at the latest, we will be out of that. I'll send you an email because I don't hold through earnings. But hopefully, we can get some nice move before earnings ends. The next one that I am in is Tilray, a marijuana stock, which is basically doing nothing at all. We got into this at $7.40. Currently, it's hanging around $6.50. It still looks good. I mean, if it gets back above $7.50, I think this thing can definitely go higher. But right now, it's basically doing nothing. If you take a look at the hourly chart, it's basically going sideways. But if it gets back above $7.50, I think this thing could really, really push to the upside. So I'm still in this. I'm going to go ahead and, I'm going to raise my stop loss on this. So my stop loss was at $5.50. I'm going to raise the stop loss to $6.14. So the new stop loss is $6.14 on Tilray. Okay, I will send that in the email as well. All right, so those are the 3 open trades that we're in. There's one trade that I called on Friday that has not triggered yet, but most likely on Monday morning it will trigger, and that one is Sage. It's Sage Therapeutics. So I have an order to buy this thing long over this 3160 area, right? So I sent out an email on Friday. I'm still liking this thing. Most likely it will trigger on Monday, and then I will trade that on Monday. All right. If it gaps up, what do we do, right? Here's the question. Because it's possible maybe this stock gaps up above our entry. What do we do then? Well, in that case, what we're gonna do is we're gonna use a, if it's between 31.50 and 31.70, then we'll just buy it at the open. Does that make sense? So if it's between 31.50 and 31.70, 31.60 and 31.70, then we'll just buy it at the open, no problem. So if it's above 31.75-ish, then use a limit order, okay? So that's what we're going to do on the Sage. I'm liking this one. Now, here's my dilemma here. I do like a lot of long trades right now. I have a really good watch list of long trades, long ideas, but I don't know if it's the right environment to do more longs if we're expecting the market to pull back, right? That's the thing. If we're expecting the market to pull back, why should we do long? And that's my dilemma here. I do like a lot of long trades at the moment. So we will see. Let's kind of go over them and see what we want to do, okay? So first one, obviously oil, USO. So USO obviously was a pretty good trade for us, a couple weeks ago. If you remember here, a few weeks ago, we bought the USO pretty much right here at the dead low, and boom, it spiked up and we sold it, and that was an awesome trade for us on USO. I still like oil here. We came back down into that low of the previous low on oil. I think we're going to try and break it. So $4 is a pretty interesting number, right? So we're probably going to break that. I hope we break that. So if let's on Monday or something, sometime next week, we break below 4, I'm probably going to buy this thing, right? So keep an eye on it, okay? Keep an eye out on my emails for USO. If we go lower, if we go under $4, I'm probably going to buy this thing back again. All right, so keep an eye on that. All right, next one on the list, we have a VXRT, VaxArt Inc. I don't know whatever this stock does. So this stock is obviously crazy, This used to be, back in January, a 30-cent stock. 30-cent stock went up to 70 cents, came down to 48, went up to $1.12, came back down. Went to $2, pulled back to $1, went to $3.50, back down to $1.10, then to $2.90, and then back down. But what's interesting now is it's stabilizing. And you got a nice green candle on 15th April, then, sort of like a 3-bar play situation setting up. So I do like this trade. I'm going to do this long. So this one I'm going to do, the entry is going to be $2.06. So we're going to buy it at $2.06. Okay, and our stop loss on this thing is going to be $1.80. Let's see. The stop loss is going to be $1.74. Okay, so 206 by $1.74, and we're going to see if it can come back into $3 area. So VXRT is what I'm going to do. I really like this one. Although when I look at the higher time frames, it's still pretty decent, although it's a crazy little stock. Next one on the list is VLRS. This is Controladora Vuela de Aviación. Is it? I don't know, whatever this company is. Spanish company looks like, right? Some Spanish, Mexican, something like that. I do like this stock as well. It's down quite a lot, consolidating, going sideways. If it gets back above $4.13, it could probably go into $5 or $6. But actually, I'm going to stay away from this because on 23rd April, it's got earnings coming up. So it doesn't make sense to buy something for 3 days. But it is a good-looking trade. Another one I'm liking right now is CCL, Carnival Cruise Lines. If this thing gets back above $14, I kind of like this. Like $14, stop loss like maybe $11. See if it can go back up to 22. So I do like this as well. But because of the market, because of me thinking that the market could pull back, I am not a huge fan of this yet. So we'll see. So I'm not going to officially call this right now, but I might, right? So I do like this. So here's an idea for you if you like it. If it gets above 14, looks pretty good. But I'm going to hold off on it, see how the market reacts in the coming days, and then I'll think about this. But I do like it. Another one I like is KLXE, KLX Energy Services Holdings, penny stock. But I think if it gets back above, basically if it gets back above $1.20, right? If it gets back above $1.20, probably could go into $2. So, and what I like about this is this huge volume that came in a few days ago. So it looks like somebody is obviously buying. And Yeah, the basic premise of my swing trading strategy is I look for stuff that is sold off hard, it's dying, it's just going down, and then suddenly instead of going down, it starts going sideways. You get a nice volume spike, somebody's buying it, and then when you start breaking above moving averages, that's what I buy. Usually, that's my strategy in a nutshell. So I do like this one as well, KLX Energy Services. But I'm gonna wait on this. I want to see some more sign of strength, one more green candle or something like that. So I'm gonna wait on that. Sage will already have an auto in to get into it. Here's another one I like, a penny stock, GCI, Gannett Co. If this thing gets back above $1.05, I think this could probably go to $2.50. So I do like this GCI as well. But it's got earnings coming up on 30th April. So that's something to keep an eye on. Another one I really like is OVV. Ovintiv. If this thing gets back above I would say like $4.35. If it gets above 4.35, probably can go into 7.50. I do like this one as well. It's an energy stock, oil and gas energy, but I'm going to stay out of this for now to see for the market to be a little bit better. All right, next one on the list, NNBR. So this is a stock that we traded a couple days ago. We bought it at $1.86. It spiked up in same day to like $3 something. We got out of this. It was an awesome trade for us. I'm actually liking this again. If it gets back above $2.75 again, so let's say if it gets back above 2.75 again, I think it could probably go, maybe $5. So I do like this as well, but I am I'm not too confident yet in this one. So I'm gonna keep an eye on it, right? Again, I do like it. But if the market was somewhere down low and market had room to bounce up, I'd probably do all of these longs. But I'm expecting the market to pull back, so that's why it's not a great idea to do a bunch of longs right now. But I do like this NNBR as a re-entry. Okay. Another one I like is MIST. This is again another one we traded a few days ago. And I think if this thing gets back above 259, right, I think this could probably go back up again. So I do like this as well, MIST. Above 260, looks pretty good. Another one I like is KOS, Cosmos Energy. If this stock gets back above $1.05, I think this could probably go into $2. So I really like this KOS as well. Again, an energy stock, so keep an eye on that. And another one I really like, which I've traded it 2 times before and just hasn't been a great stock to trade, but looking really good now, is Oxy, OXY. If it gets above $13.90, let's say $14. Gets above 14, looks really good to go higher. Nice, big red bar on Thursday. Next following day, nice green candle all the way back up again. So I really, really like Oxy as well. Another one I like is GLOP, Gas Log Partners, GLOP. If this stock gets above 350, this thing has a lot of room to go higher, maybe into $6. But it's got earnings coming up on 23rd April, so, I'm not going to buy it into earnings. Another one, ENLC, again, another energy stock. If this thing gets above $1.30, probably can go into $2.50. I like this ENLC. But again, energy stocks, so you got to be careful. So what do we talk about today? So obviously, just to summarize everything, I'm looking for USO. If it gets under $4, I'm probably going to buy it again. Maybe give it a stop loss at 370 or something, 30-cent stop loss. So this is one I'm definitely going to re-enter if it breaks $4. That's a no-brainer. Where I'm going to enter, I'm going to send you an email. MIST, really like this one as well, but I'm not too confident about the markets yet. So this is one that I'm not going to call in this weekend's newsletter, but maybe I send out an email later this week. KOS, same thing. I really like this, but I'm not going to call it in this newsletter. Maybe I send out an email during the week. Same thing with the Oxy. Really like the Oxy, but not going to call it right now. Maybe I send out an email during the week. GLOP's got earnings coming up, so I'm not going to trade it into earnings, but I like it. ENLC, same thing. Not going to call it right now. Maybe I send out an email later. Same thing with the NNBR. Not going to call it in this week's newsletter, but maybe depending on how the market does, send out an email later. OVV, I'll put it in the same category as all the other ones. Same thing with the GCI. Again, I like all of these, just don't want to call them right now. The only official new ones I'm calling is Sage, S-A-G-E. This is one I'm definitely calling. I already called it, basically. And then the other one I'm definitely calling is the VXRT above 206. So VXRT, Sage are the 2 new official trades. and then the rest of them I would say are watch list items. Some other watch list items I mentioned is KLXC. This looks pretty good too. CCL, again, that's another one that looks pretty good. And then this VLRS, although this one's got earnings coming up. So those are the watch list items. So 2 new official trades for this weekend's newsletter. And we're already in 3 positions already. I think that's more than enough for this. And we'll see how the market reacts. If the market pulls back next week, which will be great because we have a market short, and then what we can do is when the market pulls back and we take a look at our long watch list again, and if they're still holding up really well, then we can finally go ahead and call them, right? So those are what I'm looking to do. One more idea I have for you, again, not an official trade, but looking a little bit interesting, is this SPCE, Virgin Galactic Holdings. If this thing gets back above $20, looks a little bit interesting. So so that's what I'll leave you with. So we talked about the market, we talked about gold, silver, oil, and yeah, and let's take a look at bonds before we end the session. So yeah, bonds basically just had a crazy run up here, right? Since then we've pulled back, and all we've done since then is just basically consolidate. So not a lot going on the bonds here on the TLT. So I'll leave you guys with that. Have an awesome one, everybody. And I will talk to you guys in the next edition of the newsletter. Keep an eye out for my emails for the week. Have a great one.